Hey guys, Boris from BK Forex. Welcome to our Forex Daily Technicals for 11/21/13. As always, trading foreign exchange or margin carries a high level risk, may not be suitable for all investors. I ask you to read the disclaimer very carefully to understand all the risks associated with trading on margin and to seek advice from an independent financial advisor if you have any doubts. Well, big reversal day in high beta today. You can take a look at pretty much all the pairs and you can see serious bearish engulfing candles. Aussie, for example, just completely annihilated, took out the highs and then took out all the lows, ended pretty much near the lows, looking to really press towards 9,300 as the immediate target of the shorts if we can extend. Generally, these kind of formations tend to be very negative and have to generally have continuity. We could certainly have a flip the other side. It's just in that kind of a crazy volatile trade. But the flip in all the high betas was really a function of the fact that the Fed minutes pretty much communicated seriously that they were close to getting ready to taper, and the I would say intensity of their commitment in the minutes I think spooked the market and pretty much blew all the high betas to the downside. So Aussie really took out the lows today. We have Chinese data in front of us. If that proves to be positive, that may provide a little bit of a lift for the Aussie, but if it proves to be negative, it could just be the nail in the coffin, push us straight down to the 93s, maybe even below 93s. There is support 93s. So 93 itself, with around like sort of 93.90, 93.80 is probably going to be initial level of support. The really big support rests right ahead of 92.50 in the 92.60s. Can we press all the way down there? Very much possible. This comes into sort of a double bottom trade or almost a triple bottom trade here. But a break here, which would be very severe, would really pretty much complete this whole recovery trade in the Aussie and push us straight down, perhaps all the way down on a longer term basis towards the 89s. So this is a head and shoulders that's just really itching to break the right hand shoulder here in the Aussie. Euro, very similar story, not as negative a format, although it is a sort of a head and shoulders here. But again, same kind of a thing. We had a retrace rally that fails pretty much at 35.50s. Today's takeout of the lows, really deep takeout of the 34.50s, is pretty significant. Again, tonight, pretty serious data today. If you can't get positive data out of the PMIs, we have flash PMIs data. If we have negative flash PMIs data, that would really another nail in the coffin, in my opinion, because it would be the fundamental catalyst to push us to 34s and really to push us possibly all the way down to the 33.50s. Remember, 33 was the spike low off the ECB comments, but now if you get this conflagration of basically negative European data that suggests that ECB is going to have to ease one way or the other, the Fed now is going to start tightening. So you have this divergence of monetary policies could really become much more serious to the downside on the euro, and this Teflon trade is going to start to crumble. So both trades look very much to the downside. Relative strength in all of this isn't to the pound. The pound came off, but did not crumble because the story there is actually quite different. The story there is the exact opposite. It's sort of the strength of the economy, even though the central bank continues to fight the idea that they need to tighten. The market believes that certainly they're going to have to face the idea of tightening a little bit sooner rather than later. Not much data on the calendar today against the UK, but still we may persist a little bit of relative strength. Although this kind of flame out candle is certainly not very conducive to upside, and it may just simply be a situation where you have lower declines. If euro gets busted, clearly the trade today that was a very negative trade was euro pound, similar kind of a flip that you see in the euro. The euro pound here coming into some very key support. So can euro pound break through the 83s? That would be incredibly bearish, and we can watch that as a possible relative trade here today if we get just further euro selling into the day session. And then the last, which is sort of interesting and very indeterminate, is the yen situation. The yen is really trading much more off of risk aversion flows than anything else. Now tonight we have obviously the BOJ meeting, and it'll be interesting to see if there's anything new in the conference. Certainly, I think they're going to try and weaken the yen as much as they can. But the question is whether the market is going to view anything they do as immediate or long term. In other words, if they don't come to the table with any fresh proposals or any fresh buying any fresh increases in QE, you may see a little bit of a disappointment and a sell on the news type of flow, especially if the Nikkei really does not rally into the session. So the key levels in the yen are 99.50 here to support side. The key levels to the upside is 150. We really need to. This is how many days is this now? 1, 2, 3, 4 days. We have not made forward progress. And when you don't make forward progress for 3 days or more, the probability of you going down instead of going up increases markedly. So watch this trade. To me, if the lows are given here at around 75, we could certainly have a extension all the way to 99.50. But more importantly, we could be yet another failed breakout in dollar yen, another double top here. So a very, very interesting and critical juncture as well. Worth watching everything today. It's been a really interesting day as far as the widening of the ranges. And now probably comes the moment of truth where the rubber hits the road. So wishing you guys the best of luck and the best of trading. This is Forrest Schlossberg for BK Forex. Over and out.